Welcome to our notes and lectures on CIMA paper P3, Risk Management. This is a strategic level paper. And this is just a very brief overview on what the syllabus covers. It is of course called Risk Management, and it looks at all various types of risk and how they might be mitigated and controlled. And it starts off by looking at enterprise risk, which is, in a way, all the various risks that could be affecting an organization. So some can be operational risks, simply the risk that the machine breaks down, or that a customer doesn't pay. Those are operational risks. There can be cyber risks. There can be risks of legal action. There's a huge, almost endless variety of risks which are around. And organizations have to try to identify what these might be. It's kind of forewarned is forearmed. If we identify a risk, at least then we can decide, is it worth doing something about? Is it really vital that we do something about it? Or is it relatively trivial that we just have to live with that? So very often the idea of a relatively small bad debt is just part and parcel of trading, and there's not much you can do about it. If you get into extending much higher levels of credit, then of course you would take more trouble to get credit references and to try to reduce the chance of this risk in a way coming to pass and damaging you in some way. So the risks, once they're identified, would typically be recorded on a risk register. We do what's called risk mapping to try to decide the likelihood of the risk occurring and the seriousness of the event should it actually occur, which will help us to decide how to respond to that risk. Strategic risk is a particular type of risk. Strategic risk, whenever you hear the word strategic, think of long term. And we could make these long term risks by, for example, not keeping our eye on technology and seeing that our products were becoming unpopular, going out of date, and that after maybe a very few years nobody wanted to buy them at all. Or we might misread political changes. At the moment, the UK is involved in Brexit negotiations, and of course, depending on where you're based and what your organisation are, there may be longer-term risks coming from the eventual outcome of the Brexit negotiations. Should you open in a particular country? Should you begin trying to market to a particular segment of the population? If that population is maybe showing signs of decline, if there are going to be fewer of them around in the future. Internal controls contains many of the responses to risk. How do we stop ourselves giving credit to people who are unlikely to pay us? Of course, the internal control is you don't give credit unless you have some sort of credit reference, and then you set some sort of credit limit, so that if losses are incurred, they're not going to be so great. How do we make sure that our inventory hasn't been stolen? Well, you kind of lock it away. How do you make sure that cash isn't stolen? Well, you lock it away, you do reconciliations and so on. How do we make sure that only authorized overtime is worked? And again, there'll be a process of managers, foremen, signing off timesheets or clock cards as authorization that the overtime was required and it was actually worked. Then at the end we have a reasonably extensive section on cyber risks, all the huge number of things that can go wrong, basically with IT systems. Easy ones, if they get infected by a virus or they are subject to hacking, or that for some reason important files are overwritten and the data is lost. As more and more of business transactions are recorded on computer, and as more and more of what a business does is dependent on good IT, then the vulnerability of businesses to cyber risks increases, and it is absolutely vital that appropriate safeguards are put in place to mitigate against these cyber risks.